In this video, I'm going to show you 3 stocks that I believe the market is still underestimating despite their critical role in some of the biggest technology trends shaping the future. These are businesses helping power artificial intelligence, data centers, and the digital infrastructure that modern society depends on every day. They have strong competitive advantages, dominant positions in their industries, and long growth runways that I think could create significant value for shareholders over the next decade. Let's start with the first stock, Broadcom, ticker symbol AVGO. When most investors think about artificial intelligence, they immediately focus on the companies making headlines. The problem is that the biggest winners in investing are not always the companies getting the most attention. Sometimes the biggest opportunities are hiding one layer beneath the obvious story. And that's exactly why Broadcom stands out to me. When I look at the AI infrastructure landscape today, Broadcom has become one of the most important companies in the entire ecosystem. Yet despite its growing importance, I still think many investors do not fully appreciate how powerful this business has become. The reason starts with understanding where Broadcom sits in the AI value chain. Artificial intelligence requires enormous amounts of computing power. Every AI model needs advanced chips. Every data center needs networking equipment. Every cloud provider needs infrastructure that can process and move massive amounts of information. Broadcom touches all of those areas, and that's one of the reasons I find this company so attractive. This is not a one-dimensional business depending on a single product or a single customer. Broadcom has built a diversified technology empire that generates revenue from semiconductors, networking solutions, infrastructure software, enterprise systems, and increasingly from artificial intelligence applications. That diversification provides resilience, but what excites me most right now is the company's exposure to AI. One of the most interesting developments in artificial intelligence over the past few years has been the rise of custom AI chips. Most investors understand the importance of AI processors, but what many don't realize is that not every customer wants a one-size-fits-all solution. Large technology companies increasingly want chips specifically designed for their own workloads. They want hardware optimized for their applications. They want better efficiency. They want lower power consumption, and they want maximum performance. This is where Broadcom shines. The company has established itself as a leader in custom AI silicon. Instead of creating generic products designed for everyone, Broadcom helps customers develop specialized AI accelerators tailored to their specific needs. That creates a very powerful competitive advantage. Once a customer spends years developing a custom solution with Broadcom, switching to another provider becomes extremely difficult. Those relationships become deeper, the switching costs become higher, and the business becomes more valuable. That's exactly the type of moat I like to see as a long-term investor. When I evaluate companies, I'm not looking for businesses that are simply popular today. I'm looking for businesses that can still dominate their industries 5 or 10 years from now. Broadcom checks that box. Another thing that stands out to me is the quality of management execution. Technology is one of the most competitive industries in the world. Products evolve quickly, customer needs change rapidly, and innovation never stops. Yet Broadcom has consistently demonstrated an ability to adapt and grow. The company has successfully expanded into new markets, it has integrated major acquisitions, it has improved profitability, and it has continued strengthening its position across multiple technology categories. That track record matters. Because AI is still evolving, the companies most likely to win over the next decade are not necessarily the ones with the best products today. They're the companies capable of adapting as the technology evolves. Broadcom has already proven it can do that, and that gives me confidence in its long-term future. Now let's talk about one of the biggest misconceptions surrounding the stock. Over the last several months, I've noticed that some investors have become concerned about competition. Whenever a company becomes successful, competitors inevitably emerge. That's normal. But when I look at Broadcom's business, I don't see a company losing ground. I see a company strengthening its position. Demand for custom AI chips continues growing. Demand for data center infrastructure continues growing. Demand for networking solutions continues growing. In other words, the end markets Broadcom serves are expanding rapidly. And that's important because investors sometimes focus too much on who might gain market share and not enough on how large the overall opportunity is becoming. The AI market is not a fixed pie. The pie itself is getting bigger, much bigger. Every month, more companies are investing in AI. Every quarter, cloud providers are spending billions on infrastructure. Every year, data centers become more powerful and more complex. Broadcom benefits from all of those trends. That's why I think some investors are focusing on the wrong questions. Instead of asking whether Broadcom can maintain every percentage point of market share, I think the more important question is this: how large can this market become over the next decade? Because because if artificial intelligence continues growing anywhere close to the pace many experts expect, Broadcom could be positioned to capture a massive amount of that value. Another reason I like this business is profitability. Growth is important, but growth alone isn't enough. I want to see businesses generating real cash flow. I want to see strong margins. I want to see evidence that management knows how to convert revenue growth into shareholder value. Broadcom has consistently demonstrated those qualities. The company generates billions in cash flow. Its margins remain among the strongest in the industry, and management has shown a clear commitment to creating long-term value for investors. That combination of growth and profitability is rare. Many fast-growing companies struggle to generate meaningful profits. Many profitable companies struggle to grow. Broadcom manages to do both, and when a company can grow rapidly while maintaining strong profitability, it often becomes a compounding machine for shareholders. Now here's what I think makes Broadcom particularly interesting today. The market seems focused on short-term expectations. It is focused on quarterly guidance. It is focused on whether management raises projections by a certain amount. It is focused on small details that may not matter much 5 years from now. I'm focused on something different. I'm focused on where this business could be in 2028, 2030, and beyond. And when I look at the trends shaping the future, I see multiple tailwinds working in Broadcom's favor. Artificial intelligence, cloud computing, data center expansion, enterprise software, digital transformation, high-performance networking. These are not temporary trends. These are structural shifts that could continue driving demand for years. Broadcom sits right in the middle of all of them. That's why I believe this company remains one of the most compelling AI infrastructure investments available today. Not because it's flashy, not because it's constantly making headlines, but because it owns critical technology that other companies depend on. And in investing, the businesses that become indispensable often create the greatest wealth over time. When I look at Broadcom, I see a company with a strong moat, growing exposure to artificial intelligence, exceptional profitability, proven management, and long-term tailwinds that are still accelerating. Most importantly, I think the market is still underestimating just how important this business could become over the next several years. And that's exactly why Broadcom, ticker symbol AVGO, earns a spot on my list of stocks to buy now before the market fully reprices the opportunity. If this resonates with you, you're exactly who this channel is for. Please, hit the like button, share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Remember to do your own research before you invest in any stock. Now let's move on to the second stock on my list. Arista Networks, ticker symbol ANET. If Broadcom represents the brains of AI infrastructure, Arista represents the nervous system. And in my opinion, that's exactly why this company remains one of the most misunderstood opportunities in the market today. When investors talk about artificial intelligence, most of the conversation revolves around computing power. Everyone wants to know who is building the chips. Everyone wants to know who is training the models. Everyone wants to know who is winning the AI race. But very few people stop and ask an equally important question. How do all those machines communicate with each other? Because here's the reality, an advanced AI model isn't running on one processor. It isn't running on 10 processors. In many cases, it's running on tens of thousands of processors working together simultaneously. And every one of those processors needs to exchange information continuously. The faster they communicate, the faster the AI system performs. The slower they communicate, the bigger the bottleneck becomes. That's where Arista Networks enters the story. This company specializes in high-performance networking infrastructure designed to move enormous amounts of data with incredible speed and efficiency. And as AI systems become larger and more powerful, networking becomes increasingly important. In fact, I would argue that networking is one of the most overlooked pieces of the entire AI ecosystem. Think about it this way. Imagine building the world's fastest race car. You spend millions developing the engine. You create incredible horsepower. You optimize every component. But then you put a weak transmission into the vehicle. What happens? The performance suffers. The bottleneck prevents the system from reaching its full potential. The same thing happens inside AI data centers. You can have the most powerful processors in the world, but if those processors cannot communicate efficiently, the entire system becomes less effective. That's why networking infrastructure matters, and that's why Arista matters. When I look at Arista Networks, I see a company that has quietly established itself as one of the leaders in one of the most important technology markets on the planet. The company focuses on high-speed networking solutions used by cloud providers, hyperscalers, enterprise customers, and increasingly by organizations building artificial intelligence infrastructure. The reason this business stands out to me is because it benefits from multiple growth trends simultaneously. Artificial intelligence is growing, cloud computing continues expanding, data center investments remain strong, digital transformation is ongoing, data traffic continues exploding, And every one of those trends increases demand for advanced networking solutions. That's a powerful position to be in. Unlike many companies that depend on a single growth driver, Arista benefits from several long-term trends all moving in the same direction. Those trends reinforce each other. As cloud adoption increases, networking demand increases. As AI spending increases, networking demand increases. As data center complexity increases, networking demand increases. The result is a business operating in an environment where demand continues to expand. That's exactly the type of setup I like to see as an investor. But what really makes Arista attractive is not just the market opportunity, it's the company's execution. Over the years, Arista has built a reputation for delivering high-performance networking solutions that customers trust. In technology, trust matters, because networking infrastructure sits at the center of mission-critical operations. Downtime is expensive, performance issues are expensive, failures are expensive, customers need reliability, they need scalability, they need confidence that their systems will continue working as workloads increase. Arista has spent years building that reputation. And reputations like that are incredibly valuable. Once large organizations standardize around a networking platform, switching becomes difficult. It takes time, it takes money, it introduces risk. That's one reason customer relationships in this industry tend to be sticky, and sticky customer relationships often translate into durable revenue streams. Those characteristics help create what I believe is one of Arista's strongest competitive advantages. Now let's talk about one of the biggest concerns I hear from investors: competition. Whenever a company operates in a fast-growing market, people immediately worry about competitors taking market share. And while competition is always something worth monitoring, I think investors sometimes underestimate how large the overall opportunity really is. Artificial intelligence infrastructure spending is growing at an extraordinary pace. Cloud providers continue investing billions, enterprises continue upgrading their systems, data centers continue expanding. The market itself is becoming significantly larger. That means multiple high-quality businesses can succeed simultaneously. The way I see it, the networking opportunity ahead is so massive that investors may be focusing too much on short-term competitive narratives and not enough on the long-term demand picture, because demand is what ultimately drives revenue growth, and demand for faster networking is not slowing down. If anything, it's accelerating. Another concern that occasionally surfaces involves changes in networking technology. As data centers evolve, new technologies emerge, new architectures emerge, new methods of transmitting information emerge. Some investors worry these transitions could disrupt existing industry leaders. I take a different view. The companies that survive technological transitions are usually the companies that continue innovating, and Arista has repeatedly demonstrated an ability to adapt. This is not a company standing still. This is not a company relying on outdated products. This is a company continuously investing in its technology stack and responding to customer needs. That flexibility matters, because technology rarely remains static. The winners are often the companies that evolve alongside the industry, and Arista has shown a consistent ability to do exactly that. Another thing I love about this business is its financial profile. Many technology companies can grow quickly. Far fewer can grow quickly while maintaining strong profitability. Arista has managed to do both. The company has consistently generated impressive operating margins while continuing to grow revenue. That tells me management understands how to scale efficiently. It tells me the company has pricing power, and it tells me customers see enough value in the products to continue buying them. Those are all characteristics I look for when evaluating long-term investments. Strong businesses tend to leave clues. High margins are a clue. Consistent execution is a clue. Customer loyalty is a clue. Industry leadership is a clue. Arista checks every one of those boxes. Now let's zoom out and think about the bigger picture. Artificial intelligence is still in the early stages. Most organizations are only beginning to integrate AI into their operations. The infrastructure build-out supporting that transformation could continue for many years. Every new AI deployment requires computing power. Every new AI deployment requires connectivity. Every new AI deployment requires networking. That means Arista is positioned directly in the path of one of the most important technological shifts of our lifetime. And yet when I talk to investors, I often find that many have never seriously analyzed the company. That's exactly what makes opportunities like this interesting. The market often focuses on the obvious stories first. The companies enabling those stories sometimes receive less attention. But over time, critical infrastructure providers can become some of the biggest winners. Because while technologies change, the need for fast, reliable data movement never goes away. In fact, it becomes even more important. That's why I believe Arista Networks deserves a place on every serious investor's watch list. The company operates in a growing industry. It benefits from powerful secular tailwinds. It has built strong customer relationships. It generates attractive profitability. And perhaps most importantly, it provides technology that is becoming increasingly essential in an AI-driven world. When I put all those pieces together, I see a business that still has substantial room to grow over the coming years. And that's why Arista Networks, ticker symbol ANET, earns the second spot on my list of stocks to buy now before the market fully recognizes the opportunity. This video is brought to you by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Now let's move on to the third and final stock on my list. Amphenol Corporation, ticker symbol APH. This is probably the least talked about company of the three. It gets fewer headlines, it generates less excitement on social media, and it rarely becomes the center of attention during discussions about artificial intelligence. But sometimes the best investment opportunities are hiding in plain sight. Because while many investors focus on the flashy parts of technology, I like looking at the businesses that make the entire ecosystem function, and that's exactly what Amphenol does. The easiest way to understand Amphenol is to think about connectivity. Every data center, every AI server, every networking system, every cloud infrastructure platform, every high-performance computing environment, all of them require connections, power connections, electrical connections, fiber optic connections, signal connections. Without those connections, nothing works. And Amphenol has spent decades becoming one of the best companies in the world at providing those critical components. That's why I believe many investors underestimate this business. The products may not seem exciting at first glance, but the role they play is absolutely essential. Think about the first two companies we discussed. Broadcom helps provide the computing power. Arista helps move data across the network. Amphenol sits throughout the infrastructure that makes all of that possible. Every time data travels, every time power reaches a system, every time information moves through a connection point, there is a good chance Amphenol has products involved somewhere in the process. That position creates a very attractive business model, because as AI infrastructure spending increases, Amphenol benefits. As cloud computing expands, Amphenol benefits. As data centers become larger and more sophisticated, Amphenol benefits. The company is tied directly to some of the strongest technology trends in the world, and that's one of the biggest reasons I like the stock. What really stands out to me is the company's ability to consistently execute. Over the years, Amphenol has built a reputation for operational excellence. Management has demonstrated an ability to grow revenue, improve profitability, and allocate capital effectively. Those qualities don't always generate headlines, but they often create enormous shareholder value over time. When I evaluate businesses, I pay close attention to consistency. Anyone can have a great quarter, anyone can benefit from a temporary trend, but very few companies can deliver strong results year after year after year. Amphenol has done exactly that, and that's why I view it as a true blue-chip technology business. Another thing I find compelling is the company's competitive position. Many investors mistakenly assume connectors and connectivity solutions are simple products. I disagree. The reality is that high-performance connectivity solutions often require specialized engineering, deep customer relationships, manufacturing expertise, and years of industry experience. When customers are building mission-critical systems, reliability matters, performance matters, quality matters. Those factors create barriers to entry, and barriers to entry create moats. That's one reason Amphenol has been able to maintain such a strong position in its markets. Customers trust the company, engineers trust the company, and once a company becomes deeply embedded in customer designs, replacing it becomes difficult. That creates a level of durability that I find very attractive as a long-term investor. Now let's talk about one of the concerns that has weighed on sentiment. Some investors believe that increasing adoption of fiber optic technologies could reduce the importance of some traditional connectivity products. I think that view oversimplifies what's actually happening. Technology evolves, infrastructure evolves, customer requirements evolve. The companies that survive are the companies that adapt. And when I look at Amphenol, I see a company actively positioning itself for the future. The business has continued expanding its capabilities and strengthening its portfolio across multiple connectivity technologies. Instead of being left behind by industry changes, I believe the company is benefiting from them. That's an important distinction, because investing is not about identifying companies that never face change. It's about identifying companies that can successfully navigate change. Amphenol has repeatedly demonstrated that ability, and that's one reason I remain bullish on its long-term prospects. Another factor supporting my investment thesis is the company's exposure to data centers. Data centers are becoming larger, more complex, and more powerful. Artificial intelligence is accelerating that trend. Every new AI deployment requires infrastructure. Every infrastructure build-out requires connectivity, and every connectivity point represents potential demand for Amphenol's products. This creates a powerful growth engine. As AI spending increases, Amphenol participates. As networking infrastructure expands, Amphenol participates. As cloud providers invest in larger facilities, Amphenol participates. The company benefits from multiple growth drivers simultaneously. I love businesses that have several paths to success rather than relying on a single catalyst. Amphenol fits that description perfectly. Now let's look at profitability. One thing that consistently impresses me about this company is its ability to expand margins while growing. That's not easy. As companies scale, many struggle to maintain efficiency. Amphenol has done the opposite. The business has demonstrated strong operational discipline and impressive execution. That combination of revenue growth and margin expansion is exactly what long-term investors should want to see, because ultimately, shareholder returns are driven by earnings growth, and earnings growth becomes much more powerful when margins improve alongside revenue. This is another reason I believe the market may be underestimating the company's future potential. The story is not just about growth, it's about profitable growth, and there is a huge difference between the two. Now let's step back and look at the bigger picture. Artificial intelligence is creating massive demand for infrastructure. Broadcom benefits from the computing side, Arista benefits from the networking side, Amphenol benefits from the connectivity side. All three businesses occupy critical positions within the same long-term trend. But what I particularly like about Amphenol is that it often receives less attention than other AI-related stocks. Sometimes that creates opportunities. The market tends to chase exciting stories. Meanwhile, steady compounders quietly continue growing their businesses. Years later, investors suddenly realize how valuable those businesses have become. I believe Amphenol has the potential to be one of those companies. It has strong competitive advantages. It operates in attractive end markets. It benefits from powerful secular trends. It has a proven management team, and it continues delivering strong financial results. When I combine all those factors, I see a company that deserves far more attention from long-term investors. That's why Amphenol, ticker symbol APH, earns the third and final spot on my list of stocks to buy now before the market fully reprices the opportunity. Now, if I had to summarize today's video, all three of these businesses share something important in common. They are not simply participating in the AI revolution, they are helping build the infrastructure that makes the AI revolution possible. And throughout history, some of the greatest investment opportunities have come from owning the companies providing the picks and shovels during transformational periods of growth. Before we wrap up, I want to hear from you. Which company do you think has the strongest long-term competitive advantage? Broadcom with its custom AI chips, Arista with its networking leadership, or Amphenol with its critical connectivity solutions? Let me know your thoughts in the comments below. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members get full in-depth analysis on most of the stocks mentioned here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Do not forget to like the video, share your thoughts in the comments, and subscribe so you do not miss the next important investing update. Thanks for watching, and I will see you in the next one.